Hello, everyone, and welcome to our weekly market update for October. My name's Coulter.
And I'm Kelly with the Stansell Gaudreau Group. We're really happy that you're here taking the time with us. Just kind of going back, if you haven't seen our previous videos, please take the time and watch those. They're very informative and just kind of wanted to keep you abreast about what's going on in the market these days. We know you've been seeing and hearing a lot of things and just wanted to give you some certainty and clarity around the market.
So the first thing we wanted to do was take a 25,000 square foot view of the market to better understand what's been happening on the ground floor. First off is our active listings. Those have increased by 31% year over year. Now, this is an improvement from Q2 of this year, where we were at 62%. Closed sales have actually declined by 35% year over year. Again, an improvement from Q2, where we were at 57%, but we are seeing less sales, more active inventory than we were previously or the year before.
Our median days on market are also increasing to 35 days now, whereas we were at 21 days on the market in Q2. So that's really good news for you buyers. If you're out there looking at properties a couple of months ago, you knew how competitive it was, but now it's taking longer for homes to sell, maybe having a little bit more inventory for you to choose from, and there's not as much pressure on you today as there was at the beginning of Q2. And now just kind of wrapping up, prices are down 11% from their peak in March, and they're down as much as 20% in some pockets. Coulter and I have said this before in the past, but our average correction in the San Francisco Bay Area real estate market is 10%. As you can see, going back to 1984. And we're there, folks. This is the market you've been waiting for.
So if we zoom in on today's market in Santa Clara County, you can see that we are actually down 10% on the price per square foot. At our peak of our market, sometime around the April timeframe, we were actually at 964 per square foot. And we've seen a little bit of a jump as we're moving into the holidays as the listings are going down. But right now we're at 883 per square foot on average across the whole market, which is about 10%.
Because Coulter and I service both the Bay Area and Truckee, just also wanted to touch base and tell you a little bit about what's going on in the Truckee market. As you can see, something similar, but on a grander scale, right? Because it is a secondary market. It's not your primary, first home market. As you can see, a lot of the markets here doubled in the past 2 years since COVID, but we did see a peak in price per square foot price at $846 a square foot back around March. Today, we're at $622 a square foot, and that's corrected over 26%. So we're very quickly approaching those pre-COVID prices.
Now to address the big elephant in the room, which is the rising mortgage rates. It's been something that obviously we all know about at this point. It is in the news and we hear quite a lot about it. So will rates keep rising? Yes, they will likely continue to rise, but at a slower pace than what we saw previously. Actually, the run-up in prices that we've had, in interest rates that we've had this year is one of the quickest run-ups in rates that we've actually ever seen. It is expected to continue, but those rate increases are likely to ease up as we move into the end of the year.
This is from Odita Kushi, the deputy chief economist with First American. And basically what he's saying is the aim of Fed tightening is to curtail demand in an effort to tame inflation. And when it comes to the housing market, the Fed's actions are working. Home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability, and annual house price growth has slowed from the peak of nearly 21% in March of this year to 16.7% in July. There are talks of a recession in the next 12 months or so, and we should start see interest rates dropping. Now, what's that saying, Coulter? You marry the house, date the rate, and you divorce your landlord. It's creating quite a bit of an opportunity for the buyers who are still searching.
Thank you for that, Kelly. I actually really love that saying, to divorce the landlord, to marry the house, and to date the rate. It's a great saying. Now, we will find that these mortgage rates will make buying a bit more challenging, but buyers will still find opportunities. And as these changes coincide with the time of the year when buyers have historically found the best market conditions to obtain more bargaining power, that's what we're seeing. There are less people shopping right now, and I think you have that choice to wait until our rates are low again and you're bumping shoulders with another 30 buyers, or the opportunity to get something below market value and adjust those rates later as you go.
Based off what Mark Fleming was saying, the chief economist with First American, while mortgage rates are expected to continue to drift higher over the next coming months, much of the rapid increase in rates is likely behind us, as Coulter mentioned before. Nationally, while month over month, house prices may decline, annual house price declines are not expected, given the ongoing supply-demand imbalance and continued strength in the labor market. So, how are you asking, like, how are we getting buyers' offers accepted? How are people still buying properties? Well, believe it or not, we've been able to help quite a few buyers, lower their rates, get credit back from sellers, and we'll dive into that.
That's right. Yeah, we'll talk about the 2-1 buy down, which we've had some tremendous success with some of our clients actually pushing that rate down to make the purchase, or at least the next 2 years, while we're probably going to see these higher rates moving into lower rates, to allow those monthly payments to stay somewhat low.
Now, what is a 2-1 buy down? That's a great question. Well, basically, what happens is you pay a lower rate and payment in the first 2 years. So, year one, you're paying 2% less than the contracted rate. Year two, you're paying 1% less than the contracted rate. And year three, you're going to be paying the contracted rate for whatever rate it is at that year.
To explain how it works in practice, that upfront cost with the buy down is actually put into an escrow account and distributed monthly to supplement those payments and bring down your monthly payment. Now, if the client refinances or sells, any remainder in the escrow account is actually credited to that client.
So let's run some numbers here. If you were going to do the 2-1 buy down, this is how it would lay out. Year one, you would have an effective rate of 4.25. Again, going back, it's going to be 2 points lower than the posted rate. Your monthly payment would now be $4,919, a monthly savings of $1,237. So over the year, you're almost saving $15,000. Year two, you're at 5.25, which brings your payments up to $5,522, savings of about $635 a month, which is about $7,621. And then on the third year, you're going to pay whatever the rate is on that third year. Again, if you end up refinancing, going back to the saying, date your rate, you can always refinance and get the remainder balance into your account as a credit. So about a total savings of $22,500.
That's right.
Not bad.
Can't express date the rate enough too. And there are more creative options. If you refer back to our previous video, we actually talked about a specific example of the use of a buy down. We've actually started to use other tools as well, like interest only loans, because again, dating the rate, we know in the next 2 to 3 years that those rates are going to go down. So it's a temporary thing. And in the time being, we're working to bring those monthly payments down, which is where we all live, is in the monthly economics, right? We don't have a crystal ball. We don't know what's going to happen, but we do know there may be a good window of opportunity. And we know that those rates change.
Definitely. And if you're waiting for those prices to crash, you're going to keep waiting. And I think the perfect opportunity is here, the market you've been waiting for. So don't wait any longer. Our contact information is up here on the screen if you want to reach out to us. But until we talk again, we'll be right here ready to help you create a better life through real estate.